Hey everyone, Dalton Grados with Grados Capital here. And this weekend I read this book, Best Loser Wins by Tom Hougaard, Why Normal Thinking Never Wins the Trading Game. I've read a lot of different trading books, and all the Mark Douglas books, all the classics, of course. Um, but here I thought I would do a quick book review and just share some of my key takeaways. Now, obviously, in this YouTube video, I cannot cover everything in the entire book. These are just a couple of my takeaways. I would highly recommend reading it yourself, or like I did, I actually downloaded and listened to the audiobook version. But this guy, Tom Hougaard, is a great high stakes day trader, by the way. He is a full time retail trader and he trades very large size. Upwards of $3,000 per point in the futures markets. So you can imagine the size that he is throwing around all day. But anyway, and he has experience in Wall Street and everything like that too. But let's get to it and just cover some of the key things I took away from this book. So in trading, unlike life, the best loser wins. And so he mentions in one chapter a study that was done from a trading broker with 25,000 traders, and they had 43 million trades between those 25,000 traders. So some pretty statistically significant data to go off of. Now, we know that 90% of traders are not profitable, right? So how many of those 43 million trades were profitable trades? What would be your guess if you know that most of these traders are not making money at the end of the day? How many of their trades were profitable? The answer is about 66% of all the trades were profitable. So, what's going on here? When the traders were right, they would secure a profit. And then when the traders were wrong, they were really wrong. So they were holding on to losers in hopes that they would return. And as long as the trade is active, of course, there is hope, right? For the winning trades, best to secure a profit to avoid the potential of losing your profit and losing what you have gained from that trade. So, in order to not be like those 90% of losing traders, we have to be hopeful when others are fearful and fearful when others are hopeful, right? And this is kind of a common trading mantra, Warren Buffett, be greedy when others are fearful, fearful when others are greedy, that type of thing. But clearly the data is showing that 90% of people that get into trading are not able to implement this. Even though this might sound like a good idea, when the time is present to enter into battle, when you're really in front of the screen and really in a real trade, how well do you execute this, right? And that's what makes the difference. We have to train our minds differently. So we don't see things as they are. We see things as we are, right? You see the market as you are, right? So in a drawdown, how are you trading the market, right? Are you looking for every single opportunity that might be there in order to make your profits back? And then when you're on a win streak, how do you trade the market? Are you more relaxed? Are you kind of letting things go? You don't want to give your wins away, right? The market does not know your P&L, right? So again, we're not trading the market as it is. We're trading it as we are. If we're on a drawdown, we got to come back. If we're on a win streak, we don't want to lose that win streak, right? So again, talking about the 90% of failing traders out there, in a losing trade, they operate out of hope and the belief that it will become a winner. And in a winning trade, they operate out of the fear that they will lose profits. The 10% do the opposite. And so we have to retrain our brains to literally, he mentions in the book, retraining our brains to reduce or even get rid of our humanness, right? This is all our natural human emotions, human instincts that are coming into play in this here with operating out of hope and operating out of fear. We have to reverse that. And so that goes directly against the grain of our natural human instincts. We have to, in other words, kind of get rid of our humanness. And that doesn't mean we become sociopaths, but it means that when it comes time to execute a trade, we must think and operate differently. We must think and operate the opposite of 90% of traders out there. So the 10% of winning traders are hopeful in their winners. When they have a winning trade, they're holding on to it and even adding to their positions. And they're fearful in losers, right? Cut a loser quick when it's not working. That's kind of trading 101. But again, how many people are actually doing it? In trading, your hope for gain has to be greater than your fear of loss in a winner, specifically in a winning trade. Hope for gain must be greater than your fear of loss. So the main key takeaway, at least for me personally, was managing winners. Because in my trading, I'm good at cutting losers, right? I mean, that's the first thing you really got to get good at if you want to become a profitable trader. And again, I see so many people on the internet, holding on to losers, moving their stop losses lower because they believe in the trade. They think it might come back. So, I mean, that's the number one, right? And that's become easy for me is cutting losers quick. But then the next objective that's probably arguably harder is managing winners, right? Because although I might cut my losers quick, I also kind of want to cut my winners, right? I want to secure that profit. That feels good, right? So how do we manage winners? Adding size to winning positions. That is hard to do because you don't want to increase your cost basis, right? If you're in a trade, you're in at a really good price, it's moving in your favor, you're up on the trade, then if you add, now it's going to move your average cost up, right? And so you're not going to be in as good of an entry if you're adding size. And so that's hard to do at first. But mathematically, if we do execute that, then our winners will be sizably larger than our losers over time, right? So if we're entering a position, our core position is, say, 3 contracts. And every loser that we have is going to be on those 3 contracts. But every winner, we're adding size up to 5, 6, 7, 8 contracts that we're adding to winners. Assuming, over time, assuming if we execute that, our winners should be sizably larger than our losers, right? Here's the interesting thing, where the 90% of people are taking profit, the 10% of winners are adding, right? So most people think when they get into a winning trade, okay, my trade is winning, where should I take profit? But the elite traders are thinking, where should I add to this position, right? So where the 90% of people are taking half their profit and letting the rest run, we should be adding at that level. Wherever we think is a good position to take a little bit off, we should be adding more. Because why would you let a winning trade run on a smaller lot size, right? That makes no sense. Now, this is all great to think about, but it's like having all these tools is like knowing how to put together a rifle. That's gonna be good to know, but how do you actually perform when it comes time to go into battle, right? So how should we implement this? Number one is you got to go over your trading data, right? I'm sitting here, I'm making this video. I know my trading data. I don't know who else is watching this. I don't know what you're good at. I don't know what you're bad at. I don't know what you need to work on. You've got to have your own trading data. Of course, if you're not tracking, that's step number one. You got to start tracking your trading data. You got to be able to look at a spreadsheet and objectively see how you're performing. And then you need to figure out what's wrong. What are you on good winning streaks, but then 1 or 2 losing days will ruin all that? That might be what's wrong in your trading. Are you cutting out of winners. You're taking profits on winners, and then they end up running the whole rest of the day, maybe even the next few days. And your entry point was like a really great entry. And if you had just held that one trade, I mean, it would have made your month. But instead you're cutting for small profits. Maybe that's your issue, right? But you're gonna know that when you start tracking your data, right? Um, and then the next thing, how to implement this is start small. So particularly when it comes to managing winners, you might you want to build the behavioral habit, right? First. So we're not going to even focus on size or dollar amounts. We're going to focus on actually building a behavior. And so this could mean, and kind of my takeaway, what I'm going to take away from this is enter my core position as I normally would. But then when it comes time to try to start adding to the trades, I'll add small amounts. So maybe I'm in my position long 5 contracts. And then maybe I'll just add 1 contract later on in the position, or maybe build up to adding 2 contracts. So it's not really going to affect the size of my position. It's not really going to affect my cost basis as much because I'm already in 5 contracts. I'm just adding 1, but it will build the habit. All right. And I think that's the end of my presentation here. So that was my takeaway from this book, The Best Loser Wins. I do highly recommend reading it yourself, listening to it on Audible. It's about 6 hours on the audiobook version. You do that 1.5 speed. It's a bit faster. And if you like this sort of content, let me know in the comments. Make sure to like, comment, and of course, subscribe to my YouTube channel. And I will see you guys next time.